All right, hello everyone, and welcome to our latest ALTA Insights webinar. I'm Jeremy Yohe, ALTA's Vice President of Communications, and today we've got a fascinating presentation lined up to dig into cyber insurance, liability, exclusions to coverage, data security requirements, and we'll also provide some key takeaways. As you know, I've got the obligatory housekeeping items to work through before we get to the presentation. As a reminder, our webinars are recorded. You'll get an email with a link to the recording tomorrow, and you can always access our webinar recordings at alta.org/webinars. You can access a PDF of today's presentation now from the handout section of the GoToWebinar window pane. If at any time you have a question, submit them through the questions box. We'll hold a little time at the end for Q&A. And also a reminder for anyone who is looking for CECLE, we do offer education credit for many states. Credit is only available for those attending the live presentation, and our platform does track attendance. So to meet state compliance, there'll be some poll questions during the webinar, making sure you're paying attention. So no multitasking out there. At the end of the presentation, I'll post a link in the chat box that you'll need to have to be able to report the information for your CECLE credit. We do have, we do have a new process for this. So, you know, when you do click the link, it'll take you to the ALTA website. You'll need to log in and then just provide the information that's requested. And then you can also check the attendance certification box, request credits. So hopefully that's not too clunky. For questions, send an email to education@alta.org. Do need to thank Old Republic for sponsoring today's webinar. And before introducing today's speaker, we have a short message from Old Republic.
What sets us apart from the competition? With a national presence and local offices to support our agents across the country, we have the knowledge, tools, and resources to help promote agency growth and support your business operations. Maintaining a strong financial position is core to Old Republic Title's strategy for success. From our sales team to policy assistance and underwriting, our team has the passion and experience to provide the answers you need. Old Republic Title, where excellence is standard.
All right, thank you, Old Republic. Let me move a few things here on my screen here. And now I'll be able to introduce today's speaker. All right, Joe, we finally got through all the housekeeping items. Joining us today, we have Joseph Brunsman. Joe is managing member of Brunsman Advisory Group, which is the go-to source in the rapidly evolving E&O, cyber insurance, and compliance sectors. Joe got involved in the cyber and professional liability realm in 2015 after serving as a lieutenant in the U.S. Navy, working as an anti-terrorism officer. He's also a best-selling author of the book Damage Control, Cyber Insurance and Compliance. He's also an insurance broker and enjoys jiu-jitsu and biohacking. So maybe a webinar on biohacking later. That's a pretty diverse background, and I really only kind of took a few of your bio information. So Joe, I'll turn the presentation over to you. Let me make you the presenter so you can share the screen. And I'll step to the side.
All right, thank you, Jeremy. Also, I should add, relevant to this discussion, I'm a former IT and I got my bachelor's in robotics and my master's in cybersecurity law from the Carey School of Law. So as we're going through, I want you guys to know that I knew you were going to have a PDF handout for this, so I'm not going to kill you by reading every single line, right? I'm just going to be hitting the bullet points here. But I wanted to make sure that you guys had some good takeaways as far as material to take home and some actionable items to assist you. All right. So first, let's start off with just kind of the baseline here. I think we all need to understand fundamentally, what is cyber insurance? So in a few minutes, I'm going to teach you probably more than most of the people trying to sell you this stuff. You should also keep in mind that absent special circumstances, the general rule here is the guy trying to sell you a cyber policy doesn't need to read or understand what he's trying to sell you. All right, so it's kind of a wacky system, but ultimately what this means is that the onus is on you as the person purchasing the policy to make sure you're getting what you need, making sure you're getting what you want there. All right, so what is cyber insurance? Fundamentally, it's very simple. 2 sides, 4 buckets, and exclusions. All right, so if you look at the 95 page or 100 page, some of you have some longer policies out there, all of that can be boiled down into 2 sides, 4 buckets, and exclusions. All right, so first let's start off with what are those 2 sides that you could be dealing with. So the first side is third-party coverage. So that's your clients, vendors, regulators, some other third party. It's people that want money from your business following some type of cyber event. All right. There's also some media liability stuff in there, but I'm just going to leave that out because it's not used all that often. All right, so now let's look at what most people think of as cyber insurance, and that's first-party coverage. So that's for you, and that's money that your business has to pay, needs to pay, wants to pay following some type of cyber event. All right. Now, what were those 4 buckets that I was talking about before? So we can really break all this down into data breach and cyber events, ransomware events, loss of funds, but not much. You guys got to be really careful there. And then what I call miscellaneous, situationally important, often missing, that type of stuff. Now, I want to tell you that it is nice to have a framework to understand what it is that you're purchasing. However, don't just fall into, hey, this thing it's only a data breach. It's only a business email compromise. It's only a ransomware event. Often we see these interplaying with each other. All right, so you can have a business email compromise that leads to a data breach. That data breach leads to a regulatory inquiry, which uncovers information which leads to a class action claim. You could have ransomware events. So something like 70% of ransomware events also include data exfiltration. And so with that, you have what started as a ransomware event turns into a data breach, which becomes a double extortion, sometimes a triple extortion event. All right, so it is handy to have a framework to understand it, but don't just think that these are standalone items. They very often interplay with each other. All right, moving on here. All right, what types of coverages should you be looking for in that cyber event, right? So imagine you guys have PII, maybe PCI, some other types of information we'll talk about here in a minute. What are you looking for? Attorney, forensics, hacker damage, notifications, credit monitoring, business interruption reimbursement, that type of thing. All right, so pretty straightforward. Next, ransomware. There's a caveat here that most of you are unaware of, but broadly speaking, what do you want? Attorney, forensics, a lot of the same stuff. Ransom payment generally comes with a negotiator. Now, a big question we always get here is, hey, how much is that ransom payment going to be? I'll tell you, I dork out on this stuff more than I probably want to admit. I was doing this long before it was cool. There was no money in it. I've read probably every single study out there I can get my hands on for years and years on end. Nobody really has any idea what a ransom event could cost you. All right, so you could get hit for a $5,000 ransom. You could get hit for a $5 million ransom. We're just not quite sure. Now, keep in mind, the bad guys are really good at this. All right, we are losing the cyber war. Nobody should really be able to dispute that. Anybody with any authority in this space. So keep in mind, they're getting into systems. I've already seen this with my own client. They got into their system, searched for their cyber policy, and knew exactly how much cyber insurance they had. All right, so keep that in mind, because the ransom payment, that's only part of it. There's the business interruption, all these other issues that could come with it. All right, hacker damage, business interruptions. And then, as I said before, notifications, credit monitoring, potential for regulatory fines and penalties, because 70% of ransomware events according to Cover, also include data exfiltration. all right, which could lead to having to notify your clients and former clients that their information got stolen. All right, next, loss of funds. And this is where you guys really got to be careful, especially in your industry. So when I say terms like cybercrime, wire fraud, push payment, reverse social engineering fraud, what do those terms actually mean? Nothing, actually. They only mean what the policy says they mean. So please take a note, go back, read your cyber policy. All right, specifically, these things are very situation based. All right, so if you don't understand it, reach out to your broker, start asking questions and go, hey, if this type of situation happened, where do you think we might have coverage under our policy? All right, and they should be able to quote section and verse to assist you with that. All right, because if you look at the declarations page, just because it says social engineering coverage or wire fraud coverage, that could be completely meaningless to you. You have to read the actual definitions. Now, in addition, because I know you guys are dealing with a lot of this, some of these policies have rules you have to adhere to before reimbursement. So if you didn't read your policy, you don't want to figure out after a good chunk of change has gone out the door that suddenly you were supposed to adhere to a prearranged callback number, to a known entity, et cetera, et cetera. All right, not the time you want to figure that out. So once again, please read your cyber policy. These things are not standard in any way, shape, or form. They are constantly evolving, constantly changing. So you need to make sure you're keeping on top of this. All right, now we're going to see things like miscellaneous, often missing, situationally important. I don't want to get too far into this, but things like cryptojacking, bricking, system failure, utility fraud, invoice manipulation. Now, broadly, what does that mean? Bad guy gets into your system, tricks your clients into wiring money ostensibly meant for you to some bad guy's bank account. All right, dependent business interruption, all these other types of things that you could see inside of there. All right, do you need these? Do you not need these? It just depends on your business. All right, and I will head off the question early. No, there is no best cyber insurance company. All right, not yet. We might get there, but it just depends. All right, so keep in mind, these are legal contracts. You guys should treat them as such. It all depends on what's in the policy. All right, now let's talk about some interesting, important exclusions. Pardon the coffee. I was in the Navy for over a decade, so caffeine addict over here. Now, these important exclusions, these are coming down the pipe. These you will see. You either A, already have them on your policy, you just don't know because no one's read it, or B, they're gonna be on your policy in short order. Why? Because from the insurance company perspective, they just make sense. What we're seeing here is about 40 years of policy evolution in a traditional insurance policy crammed into like 5 to 7 years. So these things are moving very, very quickly. Insurance companies are very tired of losing massive sums of money. All right, what was the last 20 years of cyber insurance? Hey, take your Ferrari, park it in the ghetto, keep it running, keep the keys in the ignition. You don't need a tracking device, you know, put a gift card on the console for the bad guy. Those days are over. All right, those days are absolutely over. We're never going back to it. What we're seeing now, everybody freaks out about the application. And I understand that is part of the process. But where I think the cyber insurance industry is headed is more and more exclusions. Now, why is that? Because it's cleaner. It's easier to deny a claim based upon just a black and white exclusion compared to dealing with a potential material misrepresentation within an application, and you have to get into the thought process of what the guy was thinking. That typically gets litigated. Straight up exclusions, very, very hard to litigate that, very hard to get out of it. All right, so what are we seeing already? Stricter control requirements. Now, what does your particular firm need? I don't know. I don't know your particular firms and all the ins and outs. But what I will say is, broadly speaking, they're requiring more and more every year. You're going to see it on the applications. You're going to see it on the quotes, those prior to bind items. So when you're sitting there, you're talking to your MSP, you're talking to your IT folks. Maybe you have a combination of the two, like a co-managed type solution there. You need to start thinking, all right, all these requirements, and we'll get into some of them, they're all coming down the pipe, right? You might as well get ahead of this early, because I will tell you, there are two ways you're going to increase your security, right? It's going to happen regardless. You could do it the easy way, which is your own timeline, taking the time, spread it out over a couple years, plan of implementation, or you can do it the hard way, which we will see here shortly. But please trust me, you want to do it the easy way. My grandfather, who is, very, very smart guy. He once goes, "Hey, Joe, how do you know if someone's telling you the truth?" All right, now this is a guy who grew up effectively like in a one-room house in the middle of nowhere, Montana. And I was like, "I don't know, Grandpa, how do you know?" And he goes, "If it's against their best interests and they're still telling you, that's how you generally know it's truthful." All right, so what I'm telling you here is the better your controls are, the less likely you're going to get hit, the more affordable your cyber insurance is going to be, the easier your life's going to be. All right, so please take that seriously. Now, what if you haven't heard anything yet? All right, you could be sitting there going, "Well, our insurance company hasn't demanded these yet." Well, first of all, we've seen insurance companies just cut off entire industries, right? Just outright for seemingly no reason, or portions of industries. So for example, maybe 2 years ago and some change now, Beasley Insurance Company came out and they said, "Hey, if you're an accounting firm, you're under 35 million in revenue, we will no longer insure you." So now, me being the former IT guy and the nerd that I am, I went, okay, let me figure out why this is. Or is there some specific control or set of controls or a framework these guys should have that the big guys don't have, that the little guys aren't doing? And it turned out they just had no idea. They never got back to me. They said, "Hey, we don't really know why this is happening. All we know is we're looking at the numbers. Little guys are getting hit. Big guys aren't getting hit as much. We're losing money on the little guys. Little guys got to go." All right, so don't get super comfortable with your cyber insurance company right now. That could quickly change for you. All right. Next, like you don't really want to figure out 60 days before that, hey, you're getting non-renewed. Now you got to go to the open market. You got to get those quotes. Those are going to have various control requirements on them. That's not a good position to be in. So the stronger your security is before this goes down, the better your life's going to be in the long run. All right, some broad changes. We are seeing caps on widespread events. That makes sense from the insurance company perspective, because they're going, hey, if we have some big supply chain attack, we don't want to bankrupt our insurance company, and we really can't statistically define the probability of that. So we're just going to slap on a widespread event exclusion. You got to be careful there, because it only means what the policy says it means. And in my experience, a lot of these are ripe for interpretation with the insurance company. All right. Next, co-insurance requirements for ransomware. This may be buried in your policy, where you're going, hey, why would I buy this whole suite of additional cybersecurity controls when I have a $10,000 ransomware deductible, right? Or overall deductible or retention in my policy. Well, now they're bearing it inside policies where they're going, yeah, you got to pay the deductible, but you're also going to pay some overall percent of the total cost. Now, that should markedly change the risk calculus inside of your firm with how much you are willing to invest in cybersecurity, just that line item alone. And of course, lower limits and sublimits. I've seen some firms that have a history, the most they can get for ransomware coverage is 100,000. And that is so crushingly low. That'll cover them for probably the first like 2-3 hours of that event. After that, they're paying for all of that out of pocket. And you don't want to be in that position. All right, next, critical vulnerability exclusions. All right, I'm not going to read this to you. You can read it when you go home. What's the gist of this? MITRE Corporation keeps a whole list. You have software and hardware vendors that put this out. This is saying, hey, if you have a critical vulnerability that has a CVSS or 8 or greater, you have 14 days to implement that patch. Now, what flows from that? What flows from that is you're going to need vulnerability management. You're going to need patch management. You got to keep on top of this stuff. There could be seasonal issues. Effectively, what this means is you either need a full-time IT staff, so not just a guy. You're going to need a full-time staff to take care of this, or you're also going to need an MSP, quite frankly. All right, there's just no way one guy or even a couple of guys in a big business can take care of all of this. Next, old hardware and software exclusions. What's this saying? Hey, if you have hardware or software out there that is no longer being supported, and that is somehow the nexus of a cyber event, they could deny you coverage for that. All right, now, when it comes to hardware, the lead times on that can be pretty long depending upon what you're getting. So some of this stuff, it's not like a buy it on Amazon, get it shipped in here the next day. It has to adhere to your system. You have to vet that stuff. It has to be installed. It has to be configured, plus the lead time to even get it to the office. I've seen some areas where, hey, trying to get a switch for a network could take 6 months. All right. So once again, you may not know until 60, 30, 14 days before you renew that, hey, all of a sudden you got to switch out hardware. That is probably just not going to happen, quite frankly. So if you're in this position, you have legacy hardware, software, start working with your IT folks, start figuring out, hey, what's coming up into life, what's already into life, how do we replace that stuff? Because eventually, I promise you, you are going to get this exclusion on your cyber policy one way or another. All right, next, monitoring of remote workers. Now, I'm a cyber law junkie. I am not an employment law junkie. But the gist of this is, if you have remote workers and you're trying to monitor what they're doing, just please talk to your attorney. Make sure everything's on the up and up. You have very specific local laws, there's federal laws, there's all kinds of stuff. All right, not my ball of wax, but you should talk to an attorney before you start doing this. All right, and the craziest one, 0-day exclusions. So this is a vulnerability that nobody knows exists. That's why it's called a 0-day until it hits your system. So I would just recommend, if you have this on your cyber policy, please don't. All right, you need to get out of that cyber policy as soon as you possibly can. All right, now this is on every single cyber policy I've ever seen. What's the gist of this? This is the Office of Foreign Asset Control, what this boils down to. This just happens to be from Hiscox Cyber Insurance Company, but it's on every other cyber policy I've ever read. What this says is, hey, you may get hit by a strain of ransomware or some other type of cyber event that gets associated with somebody who is on the sanctions list. If that's the case, it is illegal to pay them. So yes, you may have coverage for ransomware on your cyber policy, but this is the big caveat right here. All right, so you should not be banking on the ransom payment going out the door. All right, we have already seen companies, they got hit by someone on the sanctions list. Their cyber insurance company goes, hey, we're not going to be sanctioned by the US government to pay this ransom. So I would hope you guys really, if your IT folks have spoken to you and they said, hey, you need a 3-2-1 backup strategy, you need object lock permanence, you need immutable backups, this is a really good reason why you need that. All right, poll question number 1 for Jeremy.
All right, thanks, Joe. Here, well, let's launch this poll question real quick and put in your response. Has your company lost funds due to some form of cybercrime? Any form. Hopefully not a ransomware or any. Well, Joe, about a third have said yes.
Ooh, that hurts. I'm sorry, folks. I know that's not a good place to be.
Yep. All right. Still hanging out there about a third. We'll go ahead and close it and get back to you. We've got a lot of slides to get through. So thank you for answering the poll question. Here you go, Joe.
All right. Now let's talk about the new FTC safeguards rule and all the fun stuff that you're going to have to do moving forward and all the dangers involved with this new rule. Now, there was an old FTC safeguards rule. This new rule, much more expansive, much more dynamic, and much more explicit in what you have to do. All right. So this is not a checklist. All right. Unfortunately, it's not a checklist. Your adherence to this rule is hyper specific to your exact organization. All right. Enforcement can be brutal and personal. It's only a matter of time until one of you guys gets this. Cyber insurance probably not going to pay for the cost of an FTC safeguards rule violation. So keep that in mind. And the interpretations are going to change. All right. So if you don't already have a data privacy attorney or something equivalent thereof, depending upon what state you're in, now is a really good time to start that relationship. All right. So starting off here, just to make this explicitly clear, you'll see here, this is from the Federal Trade Commission website. Real estate services company settles privacy and security charge. Now, what you want to look at is the bottom. What is part of this? Require they implement a comprehensive information security program, obtain audits by independent third-party security professionals every other year, and it's gotten more strict since this came out, for 20 years. All right, you're gonna have the FTC crawling up your business for 20 years. And by the way, if you look here, this settlement happened in 2006. So that is, let's see, yeah, I left the enlisted side. I was finally at the Naval Academy. I'm now an old guy with 2 sons, and I got all this stuff going on. These guys are still dealing with this, right, since 2006. I'm sure they're counting the days because that's expensive. All right, now we got to think about, all right, what types of information are you guys holding? You could have driver's license numbers, passports, social security numbers, bank information, tax information, loan information, all this type of material on your system. Now we have to start thinking about how long are you holding that information on your systems? All right, so Jeremy, correct me if I'm wrong. I think ALTA has effectively said, hey, it's up to the states. You got to talk to an attorney in your particular state. I couldn't find anything that said, hey, here's the basic requirement. But I do know there was a previous case that we'll talk about where a company had 18 years worth of data. So now what is a record? There's going to be a benchmark here of 5,000 records, right? Above or below. So if we start saying, hey, maybe you have up to 7 years of this data stored on your systems. Well, now let's imagine I bought a house and you have the information of myself and my wife. Well, that's 2 records. So you can quickly see where the 5,000 record benchmark, you could very quickly hit and exceed that benchmark. All right, now who shall adhere to this? Financial institutions. All right. Now, per the FTC, just to be explicitly clear here, what matters are the types of activities your business undertakes, not how you or others categorize your company. So there was a famous case where they went after a car dealership years ago, and they said, hey, a car dealership is now a financial institution, right? Nobody would have forecasted that. We've already seen they've gone after people in your industry. This is just clarifying the point that just because you think that you're not going to be construed as a financial institution, I'm saying you're probably wrong there. Talk to an attorney. All right. Now, who is wholly exempt? This big red paragraph here right in the middle. And if you can understand what that means, I would say you have a future in the legal profession, because that is just administrative nonsense at the end of the day. So what does it mean? Ask an attorney. That's exactly what it means. But I'm going to say there's a really, really good chance you fall under this law. Now, what are you trying to safeguard? You'll see non-public information. All right, we're going to talk about what that is here in a second. But paper, electronic, or other forms, right? If it's handled by you or one of your affiliates. So just because it's in the cloud somewhere doesn't mean you're getting out of this, right? More so, just because your client's information is in the cloud, let's say through no fault of your own, that information gets stolen, you're still on the hook. The FTC can still come after you. There's other various provisions here where they can get you. All right, and then non-public information. Let's look at that. PII, so a bunch of that information I spoke about before, so driver's license numbers, social security numbers, tax information, tax returns, and any list, description, or other grouping of consumers and publicly available information pertaining to them that is derived using any PII. All right, so you may have other lists out there. Maybe they don't even have a social security number on them or any type of additional information there. Maybe it's just a name and a list, right? Well, that may still be construed as information that has to be taken care of. All right, now how do you safeguard that data? Biggest point here, you have to have a written information security program. It must be appropriate to your business. So what does this mean? You can't just put your name on a template that somebody sends out. It is not that simple, and they will specifically, whether it's a state regulator, whether it's a federal regulator, whether it's a class action claim, they're gonna be taking a hard look at this. So please don't just use a template. You're gonna look like a goofball in court and you're gonna get hammered for it. All right, this deals with administrative, physical, and technical safeguards. So this encompasses your entire business, which is why I was saying you can't just borrow this from a buddy. All right, all of this falls into something called reasonable cybersecurity. What's the easiest way to explain that? If you're at the wrong end of a very long table and you have to go through, let's say, ISO 2700 or NIST CSF, these are security frameworks. You would have to actually go through every one of those and imagine trying to validate why you did or did not spend money on that control after a cyber event has already happened. All right, probably not a position that you want to be in. Now, continued, here's all this other stuff that you have to do. You have to designate what they call a qualified individual. All right, now in the Federal Register, when they were talking about the initial rule here, they had actually put CIO, Chief Information Security Officer, or I'm sorry, Chief Information Officer. All right, so what does this mean? It effectively means you either have a CIO now or you're going to need a virtual CIO. I know some MSPs do that, right? You're going to have to get one. All right, it is pretty much just non-negotiable. Now the exemptions here, that's that 5,000 record benchmark, periodic risk assessments, review access controls, inventory data and devices, encrypt customer information, assess the security of your applications. We're going to see a little bit later here when that went sideways. MFA for anyone accessing customer information, non-negotiable, no one's getting out of it. All right, but there's more. And once I should just preface this by saying, or should have prefaced this by saying, this is like the 60,000 foot view of what you have to do. So I'm not naming specific controls, but that doesn't mean that your specific business doesn't have to implement that stuff. All right, these guys have a 2-year document retention requirement there, maybe more, right? Depends on your specific industry, your specific state, what the laws are there. So talk to an attorney there. All right, next, you have to anticipate and evaluate changes to your system and your network. All right, so they're saying you cannot have static safeguards. So just because it was good this year doesn't mean it's going to be good next year or even 2, 3, 4, 5, 6 months from now. All right, so you need to have a plan of implementation. Sit down with your IT professionals and go, hey, this is what we got going on. What's the biggest bang for the buck? All right, and just start knocking those out to increase your security. All right, logging of users, continuous monitoring, security awareness training, mandatory, no exceptions. All right, you have to monitor your service providers. All right, so there's that in and of itself is probably a 30-minute presentation on what precisely that could mean. So an example of this would be if you have an MSP, a managed service provider, all right, you have to sit down at those QBRs. You need to document that you're doing it because that could come up in court. All right, and you really need to start getting into the nitty-gritty of this stuff because they're going to hold it against you. All right, we talked about the WISP. You have to, let's see, a process to fix any identified weaknesses. All right, and on and on and on. Right, that's what, like I said, the 60,000 foot view. There's way more to it than that, and unfortunately, it's going to be expensive. Like, there's really no way around it. If you look at the Federal Register where they were talking about The cost of this, effectively, the FTC said, we don't care. We don't care. We know it's going to cost more. We think that it's worth it for consumer protections to do that. Now, let's talk about that qualified individual. Regardless of firm size, you're going to have to appoint someone as a qualified individual. They have to oversee that program. All right. Now, if you have over 5,000, you got to do all this other stuff, right? Most of which an MSP would do, or your internal CIO, virtual CIO, they should be able to do that for you as well. All right. But you have to keep track of that. You are going to be responsible. Now, directly from the FTC, all right, regarding this whole qualified individual piece. All right. If you bring in a service provider to help you, they're explicit in this. The buck stops with you. All right. No exceptions. They've already put it in writing. Next, your company is responsible to designate a senior employee to supervise that person, right? If they work for an affiliate, they have to maintain all the same stuff for you. All right. So what are they saying here? Hey, you have to appoint somebody. And by the way, we're going to talk about how serious that appointment is going to be here in a minute. Even if you bring in somebody outsourced, they could still come after you. All right. You can't just push it off. All right. Poll question number 2 for Jeremy.
Yep, thanks, Joe. All right, the second question here, make sure everyone's paying attention, following along. Does your company have a written information security program? Yes or no? And Joe, when you were talking about document storage, data retention, yeah, definitely state by state. Typically, it's a 7-year period.
Yeah. But I mean, we got to start thinking like, okay, 7 years worth of data. Like, how many records is that? That's probably a lot of records.
A lot of records, definitely in the real estate industry. All right, we've got 87%, Joe, have a written information security program. So good job. I'll turn it back over to you.
Good. So I would say, hey, that 87%, awesome job. You need to go back and review that. This law has changed the requirements in there. So make sure you're reviewing that thing at least once a year. All right, now let's talk about enforcement, because there's always a stick. Unfortunately, there's no carrot here. All right, there's like 8 different agencies. You guys will probably fall under FTC. You could deal with company enforcement. That's the link if you just want to go see exactly what they're doing, but also individual enforcement. And this is where that qualified individual is really getting potentially hung out to dry if they get appointed, but they're not supported. All right, now company enforcement. Just to show you, this guy was not in the real estate industry. This is in the matter of Gregory Navone. But you'll see here, by the time of the FTC action, most of his companies were either no longer operational or being operated by somebody else. This was a small guy. So yes, the FTC goes after, the Facebooks and the Ubers. They also go after small companies. All right. They've also gone after individual owners. All right. So don't think that you are so small that you're going to fly under the radar. That's not happening. This is an example of an FTC consent order. And what's going on here? I told you before that I was doing the 60,000 foot view. Here's a slightly more granular view. It depends on the company, but consider this a minimum. Written information security policy and program, essentially created chief information security officer, risk assessments, document retention and destruction, code reviews, pen testing, input validations, network segmentations, IPDS implementation, file integrity monitoring tools, DLPs, location upload restrictions, encryptions of PII, vulnerability testing, service provider selection, yearly certification to the FTC, which is stupid expensive, by the way, compliance reports, accounting record issues, employee training. For 20 years. You do not want to be under the thumb of a federal government agency for 20 years because their boss literally prints money. They don't care what this stuff costs your business. All right. Their boss prints money. I understand you guys don't have unlimited funds. Economically, it's not the best time right now, but you got to start figuring out how you're going to eat this elephant. Okay. Now let's talk about leadership enforcement. And this is where it starts getting really personal. So this is, I think, just the opening salvo. This was the first time they did this. This was just a couple months ago. So if you're watching this, if you're a CEO, if you're the CIO, if you're going to be that qualified individual, CISO, etc., this same type of enforcement action could come against you. Now, I don't have time to talk about the entire thing. You can go to my YouTube channel, just YouTube my name, and you can watch it there. What effectively happened here? FTC Chairwoman Khan said, hey, the days of leadership having their businesses get breached and then just what she called failing up, right? They're saying that is over with. That is over. So the CEO of Drizzly has a 10-year consent order personally attached to him. So anywhere he goes, if he's dealing with consumer information, that FTC consent order follows him, which means if you're a CEO and you're trying to work your way up in the world, man, I really hope you like your job, because no board of directors is going to take a chance on you and having the FTC crawling around their business when they could hire the other guy who doesn't have that type of baggage. All right, there's way more to it, but I just want you to know, you're that qualified individual, you're the CSO, CISO, CIO, CEO, CFO, they can come after you. All right, and they've already done it to somebody. They're going to keep doing this. It's not going to change. So yes, your personal livelihood is now at risk because of cybersecurity. All right. Does cyber insurance cover the cost of these 20-year consent orders? The short answer is no, it doesn't. There's no way they're going to be on the hook for that. They might cover the regulatory defense costs, but you have to imagine you've probably already paid for a data breach or a ransomware event or a business email compromise or all three, plus potential class action claims. We're going to talk about that here in a second. You could very quickly run out of insurance dollars and you're just paying for this out of your business account, which you don't want. All right. So state level, Gramm-Leach-Bliley Act, FTC safeguards rule falls under that. Generally preempts other state laws if they're conflicting. Doesn't preempt the state laws that are more restrictive or more protective. All right. So you could be dealing with Massachusetts laws, you could be, which is 201 CMR 17. You could be dealing with New York, which is 23 NYCR 500. There's a whole litany of laws out there. Now, keep in mind, it doesn't really matter where your business is located per se. It's all about where your clients are residents of. So just because, let's say you're in Florida, right, and you're killing it right now, well, maybe you have a resident of Massachusetts, or you are conducting business across multiple states. You would have to deal with a patchwork of this stuff. Now, Massachusetts in particular, very explicit, if you have even one client who is a resident of the state of Massachusetts, there's like 18 different explicit administrative, physical, and technical safeguards that you have to adhere to on top of all this FTC safeguards rule stuff. So what's the moral of the story there? Please increase your security. All right, quick example, right? When they were saying, hey, you have to assess the security of your software previously, right? This is, I just put XYZ title company, didn't want to put anybody on blast here. They got hit because of a software issue, SEC settlement, almost $500,000, right? Then New York came after them at a state level, filed charges. As far as I'm aware, that's actually still ongoing. Here's what some of they are alleging. They didn't follow their own policies. They neglected to conduct a security review. They misclassified it, failed to investigate. All these internal documents, right? That written information security plan, etc. That all could be scrutinized in a court of law. All right. So please, the 86% that already have it, you're going to want to take another hard look at that stuff, because it could become very, very important for you. All right. Just to give you an example, this is, I blacked out the names, not trying to put anybody on blast here. This was a title and escrow company. You'll see there, we continue to take significant measures to protect your information. What happened? They got hit right here. If you received that breach letter from the title and escrow company, contact our attorneys. We're thinking about a class action claim. Next, these guys just had a hint of a breach. So they had unusual network activity, and then they go, hey, this information got put out there, but if you're going to match it, you with the associated data, it's super hard. You need specific tools, but we're still going to notify you. Then at the bottom, what do they say? we are working to implement additional security safeguards to further secure the information contained within our network. So remember, easy way or hard way, they're doing it the hard way now. And they're notifying regulatory authorities. So I'm sure that's not going to be fun for them. Once again, suspicious activity in an email account, basic business email compromise here. In addition to the steps described above, we implemented additional security measures to further protect our email environment, minimize the likelihood of future events. So once again, you have another one here. This is another title company. They're doing it the hard way. All right. Now you got to think too, at their next renewal, if they had cyber insurance, they're going to have to validate all the additional stuff they've done to mitigate that event moving forward, assuming they're not getting kicked back out to the open market after being non-renewed. All right. And then surprise, here you go again. Another class action claim. So they're going against this title company trying to put together a class action claim there. All right. Now, all of this, and I'm almost done, Jeremy, I swear. Hopefully we're doing all right on time here. So all of this boils down to what I now call the data breach death spiral. So let's say you have some type of cyber event, right? You're going to have to deal with the disruption of that, which if you've never dealt with it, I really hope you don't have to. All right. I've dealt with like hundreds of these things. You don't want to be anywhere near it. All right. That could lead to client turnover. Maybe you have relationships with various other entities in the public at large, right, that are sending you business. Maybe they're not going to send you business anymore because they don't want their name attached to your name, because if someone does an internet search of your name, you don't want your homepage being number one and then all this data breach stuff, regulatory inquiries falling out from there. All right. That client turnover, now we could be looking at class action claims that leads to discovery. So now all that dirty laundry gets aired out. We've seen with a class action claim, they take the findings from the court. That leads to a regulatory action. Now you're going to have tons of negative publicity. You're going to have valuation drops. We've seen companies, large companies, face class action claims when their own employees' data got compromised as well. So you could have multiple class action claims. You could have multiple regulatory issues to deal with on top of the initial cost and stress and time associated with the cyber event. So what are my takeaways here? All right. One way or another, you are going to increase your security. All right. It's inevitable. I hate to be the bearer of bad news. I know it's going to cost more, but you could do it the easy way or you could do it the hard way. All right. Please go the easy route. Next, highly recommend you try and at least get a baseline. I know it's hard to get exact numbers. Get a baseline, a good estimate of your record count. When in doubt, round up. All right, round up. That's going to be important for how much cyber insurance you need to carry, as well as specifically the new safeguards rule and your requirements there. All right, investigate those legal obligations. I only touched the surface of the new safeguards rule. I only touched the surface of some of the other state laws you can adhere to. Other states have what's called reasonable cybersecurity requirements. So it could be more restrictive and more detailed than even what you're going to see courtesy of the FTC. Work on that plan of implementation. All right, you have to start eating that elephant one bite at a time. The longer you wait, the more painful it's going to be, the more expensive it's going to be. You may not be able to get hardware if you wait too long. All right, so keep that in mind. Sit down with your MSP, your internal IT folks. Maybe it's a combination of the two. Start hashing that out. Next, those written information security programs and plans, those are unique to your business. They will be scrutinized. So at 86%, once again, I said it maybe the third time now, please review that at least once a year. You have to update it. That could be Exhibit A in a court case against your company. So you're going to want to make sure that it wasn't just some template, because they're going to find out and you're going to look like a goofy guy. And two, it is hyper specific to your business and you're keeping up with the latest threats. All right, next, please read your cyber policy. I know not everybody can love it as much as I do, but start asking questions. Hey, if this happens, how do we think the policy could respond? What are those cybercrime social engineering coverages? Does our CFO, our controller, our comptroller, are they aware of what those limits are? Does that meet up with some administrative controls. So maybe you only have 100,000 in coverage there. Well, maybe then internally you need to say, hey, if we're going to wire something over 100 grand, maybe we need 2-person integrity, prearranged callback number, or maybe those requirements are already in your policy, you just don't know it yet. So please read that policy, ask questions, and you're going to need a CIO. You may require a virtual CIO. So start asking those questions, start eating the elephant. All right, with that, that's all I got, Jeremy. Hope you guys liked it.
That's all you got. That was a lot. That was a lot, Joe. Thank you. A lot of fascinating stuff. Everything from the cybercrime policies to data protection, and more states are passing the comprehensive data privacy laws. And Oregon was the latest one, and probably something that's coming to your state soon. So, as Joe said,
Yeah.
eat the elephant now.
Yeah, you can never go wrong by trying to increase your cybersecurity. And I will say, I'll just add real briefly, I was once at a conference, so I go and speak at a whole bunch of conferences dealing with this. And I was once at a conference and I met a plaintiff's bar attorney who brings class action claims against firms after data breaches. And I asked him, I was like, hey, what's that golden bullet when you get it? You're like, we got him dead to rights. I'm getting a new boat. And he goes, oh, it's super easy, right? And he starts bragging and he goes, every time we start subpoenaing the internal documents, but from like, say, the CIO, whoever's in charge of security, right, talking about security, he goes, every time there's some internal email where it's that guy saying, hey, I talked to him about increasing our security. I told the CEO about our vulnerabilities or the board of directors. They told me to pound sand. It's not in the budget. We're definitely going to get hit. He's like, that is exhibit A. That is me standing in front of a jury saying they knew there was a problem. They still didn't do anything about it. They are 100% negligent, 100%. Very, very difficult to overcome something that cut and dry. So then I asked him, I said, well, what is something you would hate to see when you try to bring one of these class action claims? And by the way, one of those class action claims, if you go back, it was like 1,250 people. So not that many folks. Generally, it's like 12 folks, I think, in most jurisdictions to bring a class action claim. So it's not that many. He said the one thing he would hate to see, which is why I harped on it here, was that plan of implementation, right? Where the MSP, the head of IT, the CEO, the CFO, they sat down, they had a roadmap to improve security. They were knocking it out step by step, and they just happened to get hit. He goes, that would be very difficult to try and overcome something like that. So hopefully that helps you guys.
Yeah, as I mentioned earlier, we do have a little bit of time for questions. So if you have a question for Joe, pop it in the chat box, questions box, and we'll get it answered. Joe, you did mention the Drizzly action by the FTC. It's pretty instructive. I mean, not in the title space, but instructive for how executives should understand their operations, plan to protect data, right?
Yeah. I mean, that's the FTC. So you can go look up the actual announcement by FTC Chairwoman Khan, Khan. I didn't put it in there because we didn't have enough time, but it is scathing and it is personal. And effectively what it says is, hey, we don't care that, maybe this is expensive. We don't care that this will impact your entire life if we do this. We don't care that you may go from running a big real estate entity to flipping burgers because you can't get a job. She said the rights and the privacy of consumers overrules all of that. So CEOs, leadership at these companies, you guys got to take this seriously because it's only a matter of time. Pardon me, only a matter of time until they're coming for you as well.
Mark had a question. Do the bad guys ever get caught? Sometimes. So, but seriously, on a question from Paul. You mentioned the virtual chief information officer. He asked if it's a benefit to having a fully dedicated CISO, chief information security officer, versus a virtual one. So you want to give a little bit of the pros and cons of each, maybe?
Yeah, so I mean, if your company's big enough that you can just full on hire a guy that just does this thing, I mean, great. Um, Most businesses are not in a position to do that. So generally having like a virtual CIO, many managed service providers can offer that type of expertise. Generally, it's if you go virtual, it's going to be A, more affordable for you, and B, what I particularly find attractive about that is, let's say you have an MSP and they are wired into your industry, right? They're going to be able to take lessons and best practices from different companies within your industry and bring all that knowledge to bear at generally a more affordable price, right? So I would say um, virtual security person to hire. Look up an MSP. I know Cloud9 IT does it, I believe. So you can start talking with them about that stuff.
Yeah. All right, we got a few more questions. I know we're getting to the top of the hour. I posted in the chat box the link for CECLE if you need to provide that information. So make sure you grab that before we wrap up today. Joe, how do you go about finding a virtual CISO? You know, do you Google it? Do you ask, reach out to Cloud9? You know, where do you start?
Yeah, I would say the problem we're going to run into is there's an IQ problem, right? There's only so many people that are one, smart enough to do it, right? Because it's a bell curve. So there's only one, so many people smart enough to do it, and two, have the interest and inclination to do it anyways, which is why I think most businesses are going to end up with a virtual CIO. So I would say, yeah, reach out to Cloud9, start asking them about those services, what that means, right? But yeah, you got to start somewhere. So I would just say, start doing your homework, figure out, hey, what do we need? When do we need it? What kind of budget do we have for this? I mean, budget is almost irrelevant. I hate to say it as a fellow business owner, because it's probably required. So either way, someone's getting pinged as the qualified individual. And I would not be that guy without a CIO or virtual CIO backing me up, because I don't want to be the next guy. I don't want to be the next Drizzly case that ends up on my YouTube channel.
Yeah, you talked about getting a baseline for your record count. Could you talk about that a little bit more? How should a company go about getting a record count?
Yeah, it is stupid hard and really vague. The best non-answer I have. I hate to sound like an attorney, but not that I have anything against attorneys, but it's really, really hard to do. So I'm not aware of any software. So you have to start thinking, okay, how many deals are you guys working on in a year, right? On average, you got to think, okay, how much PII do we have in those records, right? And then within that, how many years do you have for your document retention policy? So let's say it's 7, just kind of easy standard number, right? You could really start adding that up. So if you're like, hey, if it's husband and wife, right, and we're dealing with 100 a year, right? Maybe that's 700 right there, right? Go back 7 years. Hopefully you don't have more than that. If you do, you got to keep that into account. And you could start getting really rough numbers there, but I would always encourage you guys, when it comes to cyber insurance limits, when it comes to regulatory issues, always round up to the nearest 1,000 just to be safe. Because that's the $1 billion question, quite frankly, is how to do that. It's really more art than science, unfortunately.
Yeah, and when you're dealing with a real estate transaction, lots of documents. One more question, and we'll wrap up today. Question from Lisa, Joe, about reviewing vendors' cybersecurity policies. You know, should a title company review a third party that they work with, their coverage as well?
You can request a certificate of insurance, right, just to make sure they have something. Now, I would argue probably more important than that is that you are assessing not just the insurance, but the security of those third parties. So once again, this is where like an MSP really comes into play, where having the CIO, virtual CIO comes into play. There's something called a SOC report. That's kind of the industry standard. There's SOC 1, SOC 2, SOC 3. There's type 1, type 2 for each, which is kind of beyond the scope of this discussion. But you can ask for SOC reports. There's functional other equivalents that are out there, right? If they're mapping to a framework, et cetera. But the FTC has said long ago that your vendors must have security at least equal to what you have, right? So if you're sending stuff to a cloud storage company, that company better be safeguards rule compliant. The best way to start figuring that out, have that virtual CIO, he can start digging in, look at those SOC reports, start asking the really detailed tech questions there.
Yeah, awesome. All right, thank you, Joe. Robert asked if ALTA has a WISP template. I know the best practices work group is looking at that. We currently do not have a template for that right now, but good question. If you missed parts of today's webinar, or think others would benefit from listening, just a reminder, the webinar is being recorded. You'll get a link to the recording tomorrow, as well as a PDF to the presentation. And you can always access all of our webinar recordings at alta.org/webinars. Once again, if you need the link to submit CE/CLE information, it's in the chat box. So make sure you grab that link before we conclude today's webinar. I do need to thank Old Republic once again for sponsoring our presentation today. And with that will bring us to the conclusion of today's presentation. Joe, thanks for all the cool information on the evolving world of cyber insurance and helping our members understand what's covered, what's not, and really what they should be doing to protect their business.
See, you said cool information. I understand it's probably just a lot of bad news. Sorry, guys. It's what it is. You got to eat the elephant.
Well, you're right. It is bad news, but it was good information to know and how to be proactive instead of just sticking your head in the sand and hoping it doesn't happen to you, because inevitably it probably will. I mean, we're inundated with phishing emails every day, constantly, and it's what's real, what's fake. You almost got to kind of go with the attitude that everything's fake.
Yeah, truly. Truly.
All right. Well, thank you for spending some time with us today, and take care, everyone.
Bye, folks.